What's going on, guys? Welcome. No, you're back again. Somebody tell this guy to get the fuck out of here. His only job is to tell you to hit the like button.
Why do you gotta be
and
so rude
subscribe
about
to the
it?
channel.
What's going on, guys? Welcome back to the channel. I promise this is the last introduction you'll hear in this video. We need to go over the trade of 2022. The stock market is about to get bloody. Why is this? Well, take a look at this article. More than 1/3 of Nasdaq stocks have slumped 50%. That number normally points to a bear market. Not good. As a whole, the technology stock drop of recent weeks doesn't look too bad, with the Nasdaq Composite Index down 9% from its November high. But if you look beyond that number, 36% of stocks in that index have plunged at least 50% from their 52-week highs. And implications for the market aren't pretty, possibly a bear market. Historically, when the Nasdaq stands within 10% of its all-time peak, only 12.5% of its stocks have tumbled that much on average. So what is this telling you? That the whole entire market is propped up on number one, Apple, Microsoft, Facebook, Tesla, as well as Google. These stocks account for about 40% of the market weighting as a whole. So once these stocks go, that's when shit really starts to hit the fan. And if we take a look at Apple, let's take a look. Let's overlap this with the SPY. We can see that the SPY back here in late December, early December was not looking so hot. It just hasn't been over the past couple of months. But if you take a look at Apple stock, pull up the 1-year chart, you guys can see that Apple was actually going up this whole time as money was piling into Apple, and Apple has substantial room to come down, and the markets are already down quite substantially if you're not in these top 5, top 10 largest stocks. The Nasdaq today, January 18th, is down 2.26%, S&P down almost 2%, Russell 2000 down almost 3%, and the Dow Jones down about 1.5%. What sums up all of this pain? It is going to be this sentence right here. Goldman Sachs, Signature Bank, as well as brokers Charles Schwab and Interactive Brokers began rolling out fourth quarter earnings results Tuesday. Bank stocks were generally lower Tuesday after falling Friday, as the quarter's first round of bank earnings failed to impress investors. But this is only the start. We are heading into earnings season, and let me be very clear about this. What is happening right now is we have high inflation, which say if a company says they're going to bring in $5 billion of revenue in 2025, but inflation is 5% per year, that $5 billion of revenue by 2025 is going to be worth less. So that hurts companies right there. You also have the Fed tightening, which is also hurting companies, but that's all fine and dandy. That doesn't mean the markets have to come down. What is the main factor that will cause the markets to come crumbling down here in the next possibly 2-3 weeks, if not the next 2 or 3 months, is going to be if earnings start to slide. The markets can handle inflation and the Fed, tapering and tightening. They cannot handle those two things plus earnings falling at the same time. That is a recipe for disaster, and considering the weak stilts that we are propped up on, that's not good. If Apple were to drop 5 or 10%, the index is going to drop 5 or 10% as well, if not possibly more than that. So hopefully you guys by now understand the significance of what I am trying to get across here. The markets look like they're not too bad on the surface. Until you really dive into it, they look terrible, and do not be fooled by the indexes. I'm sure if you guys are watching this video, you're invested in other stocks. You're probably not heavily weighted in these top 5 stocks. If you are, great. You're not feeling as much pain. If you are not, if you're in SoFi, Lucid, Corsair, AMD, all these other stocks like I am, you're feeling the pain. But how do you actually protect your portfolio, and what am I going to do? What is the trade of 2022? Simply put, I personally think the trade of 2022 is going to be Apple February 18th puts, excuse me, not calls, puts. And why do I say this? Because Apple has earnings coming up on, January 27th. So by getting the February 18th, you give yourself ample time to see this drop, to see things play out. And when I say the trade of the year, I'm talking just a couple $100 could turn into tens of thousands of dollars if this does happen like I think it will. And that's the gamble here. That's the gambling aspect of it. You don't know how Apple's earnings are going to be, how they are going to guide for the next year, but we do know that stimulus is gone. A lot of disposable money people had throughout the last 2 years is now going to be gone. And we do know that retail sales were down about 2% in the month of December. So I imagine the earnings are not going to be quite up to par as what investors are pricing in. And the markets actually revolve around fear and greed. So the slightest decrease in earnings or lower guidance could send the markets into a rapid downward spiral, even considering the margin debt is at about $918 billion. But the SBL loans, the securities-backed loans, basically if you go to your bank and you say, hey, I got a portfolio of $1 million, the bank will give you a loan on that for, say, 3%. And a lot of investors do this to go around selling their stocks for a 30%, 50% capital gains tax. They do this instead, but it works the same way as margin, but it's not actually reported. And that's estimated to be in between $500 billion and $1 trillion in total. So the situation here, not looking too good. You're going to start seeing a lot of margin calls that are coming for the markets. So if we do take a look at this trade, specifically what trade am I looking at? Well, like I said, the February 18th 135 puts. Now, if we take a look at how much these are going for right now, they're only going for $39. So you could get a bunch of these for relatively cheap, and they could possibly go into the money if earnings are not good. That would be about a 21% drop to break even on these. Now, I don't expect that in one day. That's why I'm getting a lot of time on these, because even if Apple does drop 5 or 10% from here, these contracts are going to double, if not triple, because of the extra time that is still on them. But if we pull out the 1-year chart, Apple was just trading at those prices back here in October-ish. And if Apple did fall to, let's say, 140, $5 still from going into the money, then you would see these contracts substantially go up. Or even if Apple fell to 150, which is more reasonable, or even 160 for that matter, you would see these contracts start to balloon in price. So there's a lot of ways you guys could trade this. I am not a financial advisor. I am not saying to buy this exact trade. I am saying there is a lot of meat on the bone with Apple, and it looks like the premium is a lot better to play Apple than the overall indexes. And don't think just because Apple is such a big company, it cannot drop 20%. You would be wildly mistaken with that claim. So markets are not looking good. That is my thought on it. That is my take. That is why I think the stock market is about to crash. If you guys found value out of this video, hit the like button for me. Consider subscribing to the channel as well. Let me know down below, do you think a market crash is coming? Do you think people are just crazy? Do you think everything's going to be fine? Let me know your bull thesis on the market or your bear thesis on the market for that matter. Love and appreciate you guys. Thank you for tuning in. I will see you in the next one.